Market participants are closely monitoring the oil quotes. Crude prices are still holding at their peak levels over the past 3 months. While holding at current levels, oil traders are trying to determine further direction of oil prices. Meanwhile, hopes for quick economic recovery and higher fuel demand serve as the main driver for the energy market. Important economic data that may help investors choose future direction will be published on Friday. Most likely, oil prices will remain relatively stable before the release of the US jobs data unless something unexpected happens. After hitting the mark of $70 per barrel on Friday, Brent crude started a correctional decline to the area of $69.30 and $69.90 a barrel. The volume of long positions has decreased, but the number of short positions was not enough as well. The current uncertainty will remain in the coming days and is now reflected in slow trading. We may soon see a new round of activity on Brent. In this case, the best trading strategy will be following the momentum in the current trading range. At the same time, North American WTIs traded more actively than Brent. Yesterday, WTI managed to break through the local high at 67.97 reached on March 8 and hit the level of $68.87 per barrel. Since the speculative mood prevails in the market, the price may go through a local pullback and face a change in the trend. In the meantime, the Russian ruble depreciated by 0.8% against the US dollar on Tuesday, although it did not have any major effect on the overall situation. The dollar-ruble pair is still following the descending trajectory. After a short surge in the US dollar, the pair faced resistance at the level of 73.70 that we have mentioned earlier. In this case, the pair may once again pull back from the area of 73.70 and move lower so that the Russian currency will further strengthen. In a different scenario, there might be a drastic change in the market cycle. If so, the pair will need to settle above the level of 74 rubles per US dollar on the daily time frame. As for the euro, the ruble has been following the same trend for the 4th week in a row. The euro versus the ruble pair continues to trade in the sideways channel between 89.20 and 90.36. The trading strategy here remains the same. You can either wait for a pullback or trade on a breakout of the given sideways channel. The ruble has once again approached the upper boundary of the narrow trading range, where it has been holding for the past few weeks. The main reason for this is the lack of any relevant news background that may influence investor sentiment. Besides, some geopolitical factors are gaining more importance. In particular, the day of the meeting between Vladimir Putin and Joe Biden that is scheduled for June 16 is getting closer. Most probably, market participants will not take any serious steps ahead of this meeting. Therefore, the ruble is very likely to stay in the current narrow range for the next 2 weeks. That's all for now. Thank you for watching and stay tuned.